Oh, I should be live. Let me just get a confirmation. There you go. Yeah, it works. No, no. The audio is sounding good. All right, so um, let's get straight to it. uh, Today I'm a little tired because I ran a Spartan Beast, so I want to try and make it quick. But it's gonna be the weekly review. Keep it up as a live stream, and I like it that way just because then less people see it. I find than if I just do a post, and the less people see it, the better. It's just gonna be available for me to see. Really, is what I. Before this, I just it was either enlisted or public, but it doesn't matter. Anyways, let's go to week 35. So the kind of format that I sort of follows, I go through either my journal first or the kind of breakdown of the day. So first, though, I look at the economic calendar and Sunday. But the economic calendar this week is really not all that exciting. And whenever you have just not much news, like there's just not many news that has any really impact. Retail sales and building permits have some impact, but I found Monday and Tuesday moved well. I mean, they moved a lot. It wasn't the best movement, but they still moved a lot because there wasn't really like a huge news that everyone was looking at. Like unemployment claims comes out every week. It's not really something that a lot of people are excited about and that hold liquidity for. So I found a lot of the liquidity happened at the beginning of the week, but for a lot of the movement. But anyways, Sunday, I'd like the weekly chart to expand towards a previous month high, and so this is the previous month. No, sorry, this right here, the previous month high. This is the weekly chart. That I don't know if that happened if we went up there and hit it this week. I don't think so. The S&P and the Dow made those higher highs, but the Nasdaq is still lagging, and it's making it very frustrating to trade the Nasdaq. And what I will do is backtest the S&P 500 because if we're on the daily chart showing more strength to go higher on the S&P 500, than the Nasdaq, then obviously positioning yourself taking longs alongside your daily bias on the S&P sounds like it's a better idea. So that's something I'll be looking for next week. But I'd like dollar to continue to draw higher and inverse monthly fair value gap. And so this is the dollar, this monthly fair value gap. It did continue to draw higher. Obviously we've had a very bullish month so far, not really making much low. I think dollar is in the state of delivering higher. I was watching this weekly fair value gap, which we delivered to. But what I said is the dollar going higher would certainly give trouble to higher bias on Nasdaq, especially seeing as the Dow and the S&P are stronger. Nasdaq might have a lot of trouble going up until the dollar reaches this weekly fair value gap at least. And then if dollar starts to retrace, hits the fair value gap, goes lower, it could help the Nasdaq move a little bit better higher. And even though that happened, it did not help the Nasdaq go higher that much. So 50% of the order block 2 will have my attention if pricing is lower. So the order block from the opening level, it's a little slanted to 50%. I was looking at that area as kind of like area of that had my attention, right, where I would be looking to place most of my trades underneath the order block 2 to 50% of that order block. So Monday, no trading day. It was obviously a holiday, so there's nothing there. Well, it was a bank holiday, so it wasn't like some banks are closed, some banks are open. The day still moved, and I guess it wasn't an official holiday, it was a Federal Reserve Bank holiday, so not as much movement. And we'll look at the delivery for Monday. It just dumped lower, or no, it just went higher really the whole day. But anyways, back on Tuesday, today formed a bearish order block with a large down move. I am still not eliminating the possibility to continue lower, but now I'm starting to place attention on deeper discount levels that I initially planned for. So basically, this is just that because we had a huge down move after the up move there, said if Wednesday wants to continue, basically, if it wants to continue to create bigger down close candles down, then I would be moving my attention past the order block and down here. But that again, that's a wait and see sort of thing. Um, Only if we keep showing large and rapid bearish ranges, potentially down to the sell side liquidity noted on the chart. So that's only if we continue to show candles like today on Tuesday, where we have this huge down close candle. Okay. Otherwise, I'd want the order block to support price. So with the amount of movement presented today, price managed to take out the previous 3 days liquidity. That being said, I would wait for consolidation instead of looking for immediate higher prices Thursday. Um, Thursday has red news, and so this could set up well for reversal higher and low of the week Thursday. And this is obviously the Thursday, Friday, Monday liquidity taken in one day. Obviously, not very exciting to try and trade ahead of that because you've already taken so much liquidity that you're like bound for some consolidation almost, right? So this is kind of like what Wednesday did. It kind of came down, hit the order block and reversed and formed the low of the week on the order block instead of Thursday. But anyways, price reached up early morning to complete a market maker buy model. And this is the ahead of 9:30, right? Before the big drop. This is the initial consolidation during the 8th session. The London opens up, and then the delivery for London is lower. So the algorithm brings price lower. And around 6 a.m., we reverse and we deliver higher to buy side liquidity. Then the 9:30 open occurs, and I guess you could say like 9:30 finishes off, clears its liquidity. And when I say clear the liquidity, I mean like it makes it efficient, where it's going back and forth here, getting people into the market thinking it's broken the resistance because these are relative equal highs, and then we dump lower, right? But there's a couple different things that I liked. There's the hourly fair value gap that price comes into right there, and this is around a bit after 3 a.m. Price delivers it. And then after around 7 a.m., we get the breaker entry here that brings us up to buy side liquidity. And then after this, I wouldn't really be looking to do anything. But the significance between these two times is there are, you know, 3 a.m. is silver bullet time that IC teaches, and 7 a.m. is another silver bullet time that he hasn't really talked, but he's talked about it before. I mean, any hour of the day is a silver bullet, right? But I find very often 8 a.m. doesn't like to move much because it's usually a news release. But 7 a.m., if there's no news, 7 a.m. tends to move because 6 a.m. is like the usually the opening, and then it takes about an hour and a half. But during the 7 a.m., price likes to sort of set up for some sort of manipulation at 9:30, and it'll consolidate as we get closer to 9:30, but it'll usually show a little bit of volatility. So this is what happened. We could see the 5 minute stop run both on the London and then the warning there, paired with the higher time frame PD array, the hourly fair value gap, and the 15-minute breaker, or you can use a 15-minute order block or something, right? And from those 5 minute stop runs, there isn't really, because it's London, it's hard to find a good area to get in. But I was asked before, what's the best PD array, and simply what I would say is the highs or the lows, right? Like just selling the high there, you can do that. It's scary, but I mean, it takes a lot of experience to be confident to do that. But I mean, there's lots of fair value gaps you could short here, and maybe not every single one of them. Like if you shorted this one, maybe it wouldn't have been as good. But there's a lot of inverse fair value gaps you could take. The peanut butter PD array is just a joke. It's just it's just an excuse to get in. Really, the most important thing is that you're on the right side of price. And if you're trying to short after we take out this high and you have a good stop loss, if your stop loss is above this high, no matter where you get in, you're gonna profit. If you take profit down here in this area, it's just a matter of risk to reward. At that point, and if you're able to hold on to it, and then same thing in 7 o'clock hour, you have a nice inverse rally gap now, like a very clear run lower, which sort of sells the idea of a trend lower, and then you inverse the gap because you know that you're in a higher time frame PD rate that is supporting you. You're in a market maker buy model delivery higher, and you have the idea that we're shorting in the moment, which leads you to good entries. Now, this is like for me, like this is where I'm most comfortable trading. And I'll be honest, after 9:30, like I haven't seen many of these market maker buy models. It's been hard to really participate in very good price action like this, where we're part of bigger market maker buy models or market maker sell models. So I liked how it happened here, but I wasn't able to participate because it's not the time I trade, and it wasn't anything there for me. But what I did on Tuesday in my journal, so I didn't comment on anything else in 9:30 because probably understand why here. So when I got up at what time is this? 8:44. Well, not when I got up. When I got on chart, I'd like to see the pink shaded weekly fair value gap act as support. So this is this one there, weekly fair value gap. I have noted buy side and sell side levels I will be watching today. Currently no bias. I will wait for one of these levels to get hit. So what I'm watching here is the hourly fair value gap showing a little bit of resistance or beneath midnight open. So I would be defaulting to longs. I have the breaker here, the 15-minute breaker. That this is the hourly chart, so you can't really see it there. But this is a 15-minute breaker, the one that I showed with the silver bullet for 7 a.m. And we kind of bounced off of that, and I'm noticing delivery higher. But what I'm doing is basically, if we hit buy side, then I would look to go to sell side. If we instead go down to hit sell side, then I would look to go to buy side. And I'd want to kind of pair that with the Judas swing. So if 9:30 can do one of these, then I would take the opposing end. And then I did actually short JPY. I actually completely forgot about this. But what ended up happening is we went up to buy side and completely dumped lower sell side. It didn't give me an opportunity to get it. But JPY, yeah, I've been trading JPY recently because it was pretty good, and it did work like for a little bit. So this is the 15-minute chart. There was a 5-minute short-term high there, and I got in a 1-minute fair value gap. And this 15-minute candle, this is the 5-minute chart. The run higher into the 50-minute PD array. And then I had found this fair value gap. Now it looked better on USD JPY, inverse USD JPY, because this is the futures. There's not as much liquidity, but the foreign currencies do have a lot of liquidity. The futures don't have as much liquidity, and so it looks like this. But so it did work till around this area. Like it worked pretty well, and then it came back and saw me on like a slight profit. So it did. It ended up delivering down to the sell side. I don't know why I don't post the recap, but it ended up delivering down to the sell side later in the day after it came back up, back into a little bit of drawdown, and then only in Asia session actually did it go down to hit sell side liquidity. But because it's break even, I guess I did not update it. Anyways, let's go back to the week 35. We'll go to Wednesday. So Wednesday price day reached down to a daily order block that I was watching for the week. So this is the daily order block that I was watching, and now we hit it, and we're now going higher. 9:30 sweep down to take out the sell side at the previous day low. My next move was to aim for the relative equal highs overnight. Price did not move very efficiently after the move down. This could be due to lack of news. So one thing about Wednesday I noted is that price had obviously expanded quite a lot the previous day, and And so now you're in a position where you start to reverse. You've taken out this previous day low, and you're in the sort of you're in the condition to reverse. You're way beneath midnight open, but because there's a lack of news and because of the big range, price is just kind of very lackluster. So this is what I was noticing throughout the day. Now I did want to long. I had been wanting to long after this 930 move down. This gap there, I wanted to buy it. I had my finger on the buy button, but it never came into the gap. And so it left. I watched it go out, and it came back, and I even still wanted to see longs from here. And then it started kind of consolidate a little bit. Then it made one more move. It never gave me the breaker entry that I wanted to see. It made one more move higher, then it looked like a breaker entry lower. And so then I impulsively went lower because I was tired and I had been watching price for like 2 hours and I wanted to get in. And I kind of like felt like I was stolen from, like I was cheated on, missing this entry, and I was emotional. So I should have closed the chart, but this is going to be talked about, and there was no ideal entry presented today, obviously, um, because we never really give the nice breaker setup where we have a 5 minute short term low. Like this is the 5 minute chart, right? Like you don't really see the 5 minute short term low get taken out, and then bringing us to buy side. So now if I go to my journal for Wednesday, I don't know the reflection. I don't remember what's on there, but this is the daily bullish order block discount level I was watching hit. I want to be long this morning, so this is at 9:49. No, I'm looking for this level to be hit, and I want to be long. So I think as I took the screenshot and I was typing this out, I edited it and I said I was watching hit, and now I want to be long. So I wanted to long the fair value gap shown here. The price never gave me that entry. So this is like, as it's forming, 10:05. This isn't replay. This is like, you know, you can see the timer there is ticking down. This is like a live chart that I screenshotted. That's the fair value gap here. I had initially saw this one. It was a 30-second gap, and then I'm like, okay, people might try and long it because it's an explosive move higher. And then I chose to wait because I assumed it would get faked out, and it did get faked out. One more time, slipped a couple times lower. We have like a trend now built up, and we very clearly displaced above the entire trend and kind of shift order flow. So I was looking for this gap, and price never gave me the entry. So I was kind of frustrated, and it led me to make a bad decision later in the day. We'll keep going. Then I was interested in the white inverse fair value gap, and my model was not present. So after that gap didn't give me the entry, then I had looked for an inverse with the white gap. Again, we never ever inversed it. We never came back into it right away to long. So I waited for instead for it to retrace. Now I wanted it to basically have an initial move higher and then a move lower and then deliver higher, right? We never did that. So I was constantly just wanting to be long, and then I ended up going short and I lost. Finally, with dollar going higher and the Dow going higher, I decided to deviate from my initial bias and go short. That did not work out. I feel like I was a little bit emotional trying to do this. I was not making the best decisions. By 11, after the amount of movement done by price, I should have been done. I feel relieved that this loss was completely avoidable and look forward to refining my skills to do so. I'm proud that I chose not to trade anymore after the next loss. So, um, this is this is the first trade, right? And then this is the second trade. After that loss, I tried to go short again. I closed this one early, and I just said it. I'm done, right? So I didn't lose that much, but I think of the amount of, let's just say this trade would have worked here, right? Let's just say because I was able to see it. Let's just say it would have worked. I know I would have made at least 1,200 there. If I had held it up to that high, that's like 60 points very easily, right? I would have made at least 1,200. Maybe let's just say 1,200. Let's just say 840 points, right? And I made 1,000 on the winning day. I mean, I would have been up $1,800. I don't think I would have felt the need to trade Friday, because it wasn't really good, and that's a big difference to what the actual profit that I made this week. You know, so just knowing that this was a mistake that was completely avoidable, by just following my initial analysis and trusting myself that I'm doing the right decision and that everything's okay and I don't need to get a win right now. And there's time basically to be patient, and there's times to take trades, there's times not to take trades, and just trust that in the long run I will be successful, which I have been so far on the account and the P&L. This helps to see that because I lost today simply because I was emotional, and I know 100% that I can correct these stupid losses. Like, this is not a good loss. This is a loss that I learned a lot from. So it's good that I took this loss. So I don't do stuff like this again. But this was a very stupid loss that like should not have been taken. Right? This is not professional, basically. And let's see, what did I say after? I said one more thing, right? This was the second trade. I manually blocked trading. I'm happy I did this. I worry that consistency was just a dream, but no, consistency is very achievable. I will now implement two new rules for the time being. One, if not Dow, to be honest. I thought of that one the second time. Mainly ES. But one thing I want to talk about on this day is I want to look at the ES because the ES was much, much better to trade. If ES is not an agreement, do not trade. Two, if price is not aligned with my initial analysis, do not trade. Also, I will cease trade from trading JPY for now until I'm back at new equity high and only focus on Nasdaq. Tomorrow there is news and I want to bring it higher. I know there will be an opportunity for me. But so just real quick on the S&P, I want to go to Wednesday and I just want to show the 5-minute price action on the replay mode. And right, you can see how the Nasdaq at 9:30, right, made that move lower, but look how much less to the downside the S&P went, and it stayed above its previous day high, right? But it still took out liquidity. That's important. It still took out the London range, and made a Judas swing. And then at 10 o'clock, we delivered higher very, very rapidly compared to the Nasdaq, which just delivered. It did not go above this high until like I think way later in the day. So if you're trying to long, the S&P would have been much, much better. Now, I don't think I would have been able to find a trade. Maybe this, no, I would have been able to get in here because there's not really anywhere too long. It doesn't give me the breaker setup or anything. It's not a model. Maybe on like the 15-second. Yeah, like if I'm on the 15-second, I'm sure I could have found something, but this just kind of like goes up. It's just to show that the S&P is definitely what was the one to trade, at least today because it's going higher, and it really did like then you look at the Nasdaq and you see how like the third quarter, right, from 9:45 to 10:07, 10:08, 10:07 and a half. This does not go as far up as the S&P did in its third quarter, and then the fourth quarter is also lackluster. And this Q1 retraces quite deeply, while this Q2 just hunts lower like a lot. So Nasdaq was definitely a lot more bearish. And again, like you compare with the S&P. No, the Dow. The Dow is a lot more bullish, but you compare with the S&P, you can see how Q2, Q3 goes a lot higher, Q4 higher too. And the Dow was, well, obviously the Dow was very bullish. But Anyways, basically what I'm saying is that it worries me a little bit since the Nasdaq for a very long time has been like the leader, of the markets. I've said that many times in the past, but that the Nasdaq usually leads. So seeing these safe stocks go up while the bigger tech stocks aren't really seeing much movement, I think shows that there's a lot more fear in the market, and lack of investment. But rates are also coming down, and so this shouldn't be the case, right? And it could just be because there's a presidential year coming up, and so there's a lot less risk. I think that's definitely has to be it. I mean, tech stocks are super risky. It's a lot of investment and speculation. So if there's a presidential change, it's such a especially now it's such a big difference in the politics. Then I think that's probably why you have I mean a lack of willingness to invest in in tech. And so tech is probably not it's just not really moving as much. But after the presidential election, like I think of just taking 2 weeks off until the presidential election, to be honest. Um, I'm close to a payout. So I think I know that I can take my time and just find that one nice setup, maybe two. In fact, to be honest, I'm one $200 trade away from a payout or from being able to take a payout. I won't take a payout, but it would be nice to know that I'm able to, because then it makes trading different. Now the money I make is actually money I can withdraw, and the money I lose is money I actually could have withdrawn. So it kind of like I guess makes things a little bit more harder, because if you trade on a funded account, you first need to get to the payout. So it's different. It still feels a little bit like a second phase. But now like I can actually like all the money I win or lose is like money I could have had in my bank account. And I try not to think about that too much, but it's gonna be interesting to see how I will how differently I'll react to that, once I get there. So I have like a target goal in mind, and that's what I want to reach before I think of taking a payout. Anyways, today I rejected the bearish order block, but still closed higher. So this is like what I'm talking about is the S&P went up in new high, but the Nasdaq went up and then it went back down. It was very annoying, but London saw a big range higher, so coming into the morning, my expectations for more expansion was lowered. Now, even though London made such a big range and midnight open is so far away, because there was news, I was still willing to do an analysis. And if price did what the analysis was, then I considered looking for trades. So before I go into what my analysis was, just break down the day. So, anyways, at 9:30, some price tumbling lower. There was a retracement back to the premium range later in the day. You can see 9:30 running it back down. Then we retraced into a 15-minute breakaway gap. There was a 5-minute short-term low. I waited to get triggered before looking for valid longs back to a premium. And let me go to the S&P, and I just want to go ahead to Thursday. I want to see how it moved compared. Yeah, so I mean the S&P actually basically did the same thing. It moved almost exactly like the Nasdaq actually. But anyways, and this is also a good market. Like when I see, even though we had a large London rate expansion, when I see the S&P moving, doing the exact same thing as the Nasdaq, and there's news and my analysis is playing out, then I feel a lot more comfortable taking a trade. But one of the things I've also noticed is when London leaves a very big range, more often than not, it's very shit day. It's bad conditions and it's not a good day to trade. So as a beginner, I would always stay away and just tape read. But now it's I'm willing to take a little bit more risk trading after huge ranges like in London. Anyways, it was a 5-minute short term low. I waited to get triggered before looking for valid longs back to premium. So this is the 5 minute short-term low. And I was streaming this whole, the whole morning I was streaming and I was talking, breaking down the move higher, how there was probably some people buying it and then wanting to see a move lower. And I told that this underneath this low is where I'd be, because on the 15-second chart we have more consolidation. So the exact same kind of fake move up, due to swing down. The exact same thing if you go down to the 15-second chart happens where we consolidate, fake move down, due to swing down, and then this is where I said I would want to start to look for longs. We had displacement. I longed in the inverse fair value gap up to the breakaway gap or around it. And then it was disappointing because even though price still went up to the order block, and the high here that I was looking for, it did not really do it right away. Like it was just really, really like shit. Like it did not go back down beneath the low, but I mean, I would have wanted it to even keep going up to the daily high, but it did not do that. So, someone commented, "Hey, you have Discord?" Stuart, if you're still watching, I do have Discord, but I don't just give out my Discord to anyone, because I don't use it, to socialize with just anyone. Like it's more for my journal. So if you want my Discord to ask questions, just ask them in the stream. And I try and stream, maybe once twice a week at least. So feel free to ask any questions. And if there's a good reason you want my Discord, you can always tell me. Anyways, there was a 5 minute short term low. I waited to get triggered before looking for valid longs back to a premium. Nice and easy trade to the breakaway gap. So this was the 5 minute short term low, and then you have the 15-second consolidation or 1 minute consolidation, and then you have the nice another short term low there, which is the turtle soup, inverse fair value gap up to the breakaway gap. It's nice and easy, 60 points. So anyways, then on the journal of that day, I said at the beginning of the day, I want price to reach up into buy side. I will trade around that in whichever direction 930 takes. If price runs higher, then I will look to sell the buy side into shorts. Otherwise, if price provides a retracement, I will look to buy for another delivery to premium. I executed this trade today. I hunted the setup well and was very patient. Something to note were my expectations to see price expand higher towards buy side. Oh wait, sorry, you commented, "Oh, okay, I wasn't sure if you posted to a Discord channel regarding your trade, etc." Like, I like your content. So like I do, Stuart, like I post Discord as like my draft journal, and then I finalize things, with the screenshots I put in Discord in here. But that's very private stuff. Like I also don't just do trading. I do school on there, and it's just like my own private journal. I'm not like a guru, so and I don't plan to be. So that's why like my Discord is more like private. Um, yeah, but I do stream a couple times a week, so I will tape read, especially when price isn't that good. I'll usually stream, and sometimes you know people tape read with me, and that's a reason why I would share my Discord. Like I've had people come on and want to ask questions, and so I give them my Discord, and then we get on a call, or I invite them to my stream lab, and then they can share their screen on my stream, and they ask questions or whatever, and they want my opinion. So, anyways, then let's do Friday. So, just the journal for Friday. At the 9:17, I said that I want 2 rounds to buy side. If 9:30 can retrace to some measure of discount and balance out the 6 a.m. candle. This could lead into an entry higher. I'm also interested in going long on JPY, and now I would also be willing to short JPY. Short if JPY displaces lower through the midnight open. So JPY, I noticed the huge wick there. Whenever I see a wick like this, I never ever, you know, actually consider it. I always ignore it. Like I pretend like that's not there. So the buy side liquidity that we take is here. So we've already taken buy side liquidity. I don't care about this high. But the reason I was initially long is because whatever the news release tried to do here, right, it possibly needs to maybe go back up there because they didn't really get to do it in like a split second during the news. So if there's liquidity up here and it reached up in there, people could see this as resistance. But whatever went up there, there's people willing to sell it up here. So price is going to want to go back to there with that idea in mind because it's going to create liquidity, right? People are going to sell when price gets up here because they're going to see this momentum lower and they're going to want to sell into that wick. So I was initially long, but it looked like I had already missed it, right? Like the 15-minute chart was already expanding. We were already in a premium above midnight open, and it just looked like I missed it. So I just kind of watched it deliver and play out. But then on the Nasdaq, I had also streamed Friday, and I had done everything right. I wasn't planning on trading. I remember I invited people on to the Streamlab to tape read with me, and I did not take anything because the morning was really, really bad. But in the afternoon, however, um, the analysis was, when we have this is the 4 hour chart, I wanted to see a retracement into some discount, potentially around this area or beneath the low. It was more like inside this wick, in a discount. And instead, we did not get that. And because we didn't get that, I wasn't looking to go long. And in the afternoon, I got on the chart a little late, and the sort of model I look for uh, already played out, right? So I was a bit late, and I tried to go in on this inverse fair value gap, and it didn't work. Now I should not have taken this because I had said that for me to take a long, I need a retracement. On the bigger time frame, like I need the day to go into a discount, and they never did that, right? So it's hard to see just with this chart, but when I break down the day, we'll keep this idea in mind. What I said here is I wanted to be long this afternoon, but I lost track of time, was not on the chart for 2 o'clock. I missed the move getting in at the low, and price was in more of a premium when I was trying to long. It's a little bit of a bummer going into the weekend off a loss. I did not follow my initial daily analysis, and I was trading in a car. This is not professional, and I will do better next time by sticking to professional practices. I did re-enter when I lost due to impulsivity is what I meant to say, since I had moved my stop up and got stopped by the point. And I was in a car, in the middle of nowhere, and the Wi-Fi kept disconnecting. So um, when I got stopped, I didn't have any Wi-Fi. I didn't know if I was stopped or not. And then when I got Wi-Fi again, like a couple seconds later, I saw price had gone down to the around where my stop was and rejected higher. And I had initially had my stop here, and then I moved it up beneath the inverse fair value gap. And so I felt like, okay, well, because I had actually just moved it up, I can re-enter because I saw there was momentum higher. And then I'm like, this is stupid, closed the trade. But again, lost Wi-Fi, so I was still in the trade with a bigger stop, and I didn't not close it early, so I actually took a standard loss, like what I would normally allow myself to lose in the day. It was like a full loss, and it was a bit of a bummer going into the weekend. I still made profit for the week despite going one win and like 3 losses in a break-even trade. But all the losses that I took this week could have been avoided. Like 100% were unprofessional losses. There's professional losses like the JPY trade. If it hadn't been a break-even trade on Monday, the JPY trade would have been a professional loss. Would have been a good loss. But all the other losses this week were like just stupid mistakes that in total I think I lost like um I think I lost about 600, almost $600, and I mean, with commissions and all that, about 600, around there, $650. And that's basically like an extra. That's basically a biweekly paycheck. You know, so so just making these small mistakes. What I said next is this was a mistake, but I feel better now knowing I was able to stop and accept the losses. Everything's okay, and you profited this week. You'll do great next week if you do everything you were supposed to do. So if I just cut out the unprofessional mistakes and I just remember to stay professional, don't do stupid things like this. And I then I can make I have a lot more potential for success. And I think one thing I can really do is make it simple. That my model is fairly um, kind of like, how do I forgot the word, but it's very like easy to trade. It happens very easily. It's not very hard, to be honest. A 5 minute short term low, and then I need a 1 minute fair value gap and lining up with at least an hourly chart delivery. Some hourly candle that will deliver to some buy side or sell side. And I need a 15-minute hourly PD array, a 5 minute short term low, and then a 1 minute entry. So it happens basically almost every day. Doesn't Well, not really much ahead of the elections, but I guess making it simple. One thing I could do is just cut down the time to look for a trade. Instead of saying I can trade anytime I want, just trade, you know, 9:30 to 11. And I know that I might say that some days is better to trade in the afternoon, or some days I know that it will be better to trade in London session based on how the PM and Asia session look like. I know London's going to move, or I know the afternoon's going to move. Even if I know that, it doesn't matter. It's just not your trade. And I think that that way I minimize I guess, the opportunity to I might minimize the opportunity to profit, but I think what's more important is I minimize the opportunity to be unprofessional. And as long as I keep doing unprofessional mistakes and taking unprofessional losses, then I think that's the best practice to go to. And once I start to show more consistency, taking good losses instead of bad losses, then I can start to expand. But yeah, that's one thing I want to try and do going forward. And then I think I didn't break down Friday, but there's the last thing. So today had an inside day. Price seems to have some trouble going higher. Price provided no discount until in range higher today, and so she was not in a condition to trade since the daily bias was higher. There is no need to look at anything lower than this. And I didn't really realize it at the time when I was trying to trade in the afternoon, but this is what the hourly chart looked like. Like I was super rushed, right? I had gone on chart late and I just saw something that could work, and it was my model. And I said, I'm late, and my model already happened, but I'm gonna try and chase it. And it didn't work. But looking at this hourly chart, I mean, this is terrible. 12 o'clock. That's around 12 o'clock there. I think. This is just terrible. You don't want to trade this at all. And I guess it gives me really a lot of hope to know that all the losses I took were stupid and completely avoidable. And it's not a big deal as long as I correct them. As long as I learn from the losses I took this week, then it's not a big deal. Because at the end of the day, I still profited this week, right? And I profited last week, and I profited the week before that. And I cannot wait till November till there's cleaner price, because I just this is like these last 2 weeks before November, before the elections, really are weeks that I really need to make sure I'm locked in, and I'm doing the best job I can to manage myself professionally, which I've been doing a good job this year, but there's still little things that sometimes it gets away from me. Sometimes I re-enter the trade when I'm not supposed to, or I try and trade when I'm not supposed to, or I don't approach the trading session like I should, with the analysis that I usually do, or the things I do in the morning before starting to trade, like maybe I wake up and I get on charts right away. That doesn't happen. But I mean, like, it's things like that, the sort of things that I do before getting into the trade, not just spontaneous. It shouldn't be spontaneous. You should be sort of like the way you approach a prayer. Like you connect, or you get into that zone. You lock in sort of in order to engage with price. It's a very I guess it's a very it's not just something you just I don't know how to explain it, to be honest. It should mean something to get onto the chart. It's not just let's just get on the chart and try and make money. But anyways, that's enough for um, this week. I think there's one more thing I could share, but I don't know what I don't remember what I put in this. Let me just take that away from the screen. Oh, well, you know what? I'll share this. Sure, it's something I wrote. So this is like I was having a little bit of a worrying time after this trade. My life is fine. If trading isn't working right now, I have bigger things in mind to accomplish. I will work, and this is after just one loss, by the way. But I will work hard to reach my economic goals. I will work hard to be independent. I feel alone and scared, but I know that these are thoughts, and I won't let them influence how I feel. It's as simple as convincing myself that I'm not. No woman or outing will take away those feelings, except for the belief that I'm not any of these things. I'm not scared and alone. I am okay. I'm getting older and wiser and better every day. So, like, this sounds like someone who's depressed. And I'm only 21, and I'm already thinking about, will I be alone for the rest of my life? And that's basically what this is about. And just that loss kind of like brings in those feelings. Sometimes when I lose, I feel like, oh my god, trading isn't gonna work, and I feel like my life's over if trading doesn't work. But really, it's not. My life really isn't over if trading doesn't work, because life, I realize, is a lot more than just enjoyment and pleasure. And I also am, I believe in God a lot. So I believe that everything I go through is God's plan. And if there's a loss that I take, if there's feelings that I feel that are not, you know, are not good or are scary, that's just God that made it that way, and I have to trust Him. Is the way I see it. With this attitude and attention to details, style journaling, you will go far. Well, I hope so. Really, I try and just apply what I learned from books like, you know, Think and Grow Rich. Basically, what I'm doing here is just reversing my thoughts. Like I have, if I ever find that I have a bad thought, immediately I'm conscious of it, and I say I'm not gonna let this thought influence what I do and how I feel. Instead, I'm gonna tell myself the opposite thing. I'm gonna write it down, and I'm gonna repeat it to myself all day before I go to sleep the next morning, and at the end of the week, the opposite of that thought. And so, yeah, I guess thank you for that. It I know that this is a necessary part of trading, and a lot of people don't want to do it, but journaling has helped, not my trading, but, well, yes, my trading, but I mean my life, in ways that just I can't even describe. Like I always just think keeping a diary was just for like was useless. But when I was a kid, I thought it was for girls, but no, keeping a diary has changed my life. But anyways, I am very tired because I ran a big race today, so I won't be staying to chat. I'll be closing it up, and so good luck with next week, and thank you for tuning in, Stuart. And have a good rest of your weekend, and take care.